Hey guys, welcome back to another edition of Forex Tech Magazine. It is your host, Lewis, and today is February 8th, 2019. Hope you had an opportunity to make some money so far this year. If you have not, hang with us. Hopefully, here we will be able to help you put some good coins added to your pockets, right? But before we get into that, let's get into this, which is going to be our disclaimer. It's going to go a little something like this. Any and all information is given to you or shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Any information, or if you're looking for any financial advice, then our suggestion to you would be to seek out the assistance of a licensed financial advisor. Now that we got that out of the way, let's go ahead and get to this. And I do apologize, I'm a little distracted here, trying to get through some of these pages here on my computer. But what I was saying was, now let's go ahead and get into this, which is going to be the reason why you came here in the first place, and that is to check out some trades. So let's look at some setups that we got here going on today. First thing we're going to get into is the Great Britain Pound New Zealand dollar. Now, if you remember, over the last couple of weeks, the last couple of days, price was originally moving up into the upward trend line, but then price began to travel down. Price actually went below our A, all right? And so that caused us to negate the original price move. But then shortly after it went through our A, our price began to move back up in the upward trend. And so what we did is we went in and we put our fibs in place, all right? And Fibonacci showed us the first price move that was executed and that was completed. And then it proceeded to put in the second price move, right? And as you can see right now, here is the A, the B. This right here would appear to C, which is a good C, right? Price went down, spiked down, price drove back up, right? And now, price is in a bit of a retracement, but once again, we will still come in here, just like we've been doing, which is come in before our counter trend line move. Right? And as price crosses back above this counter trend line, right? We'll be looking to buy, and then right now, at this moment, because prices drove back into the red, our take profit would be here. This is for the Great New Zealand dollar. So right now it's at a hold, but once price crosses back over through the red, then definitely looks like it should be a buy for us. Let's just check something on the daily. Yep, looks good. Today's going to be kind of a quick one. Today, I'm just going to kind of let you guys know right up front. Not feeling too well, and I need to go back and lay down. But I did want to come in here and do this stream because I think it's important. Just looking at what we got going on right now in the market. So, but anyway. Right, so here's the Great Britain Pound Canadian dollar. This one right here, once again, was going up. Came down over a period of time. Did not come far enough down that it caused it to crash through the A, through our stop loss. All right. Price went back up, went through the counter trend line, bounced off of the support, came back up, hit resistance, and right now it's kind of muddling along a line of resistance. So a couple things that could happen here. One, it could hit this and now come back down again, or it could press back up. Ideally, because it's hanging out around resistance, it may be gathering strength and maybe consolidating right now, getting enough energy before it can push back up. Remember what we talked about a while ago? Price consolidates. After it consolidates, 70% of the time, it continues in the direction that was originally traveling, right? Which would mean there's 70% probability that's going to continue up, and there's 30% chance it's going to go down. No real way to tell until after the move has happened. But at any rate, right now where it's at, we won't be looking to get into it right now. Oops. Until price started traveling with some momentum, which means that it have to start making some higher highs, which would mean that it would have to be moving above this high here and making higher lows, right? Or we have a counter trend line break, which essentially would be the same thing. A higher high would have to go into play. That's not it right there. A higher high would have to go into play and push price up farther than what it is right now at the moment. So right now, this right here is a hold, but definitely something we want to watch because we do feel like it does have the potential to go higher over time. We just don't know exactly when it's going to happen. This one right here is a Great Britain Pound, Japanese Yen. This is another one that we had a really drastic pullback in. Price has crossed over this first initial buy zone line, this counter trend line. But as you can see, price has proceeded to move back down. It's kind of like walking this line, going back down. I think to really be safe getting into this particular pair, you're going to want to see price cross above this outer trend line here. Even though this inner trend line is crossed over, still not enough momentum to want you to really get into the market. I think your safer bet is once it crosses over this outer trend line, because it's going to have to do it anyway at some point to be able to get to that D extension. I think that's the move you're going to want to be waiting for before you get into this particular pair. And then you see how far the actual D extension is from this outer trend line. It's not that far away from it. So, in other words, it's one of those things where you got to decide for yourself: is it worth it? It's 140, so actually it's enough, depending on where it crosses over at. So 140 is not bad. But then you also look at how far you're going to be away from your stop loss, right? So if you put your stop loss at the A, then of course you're going to be a significant ways away. But if your stop loss is a little bit closer up, maybe here, somewhere, once it crosses this point, then the risk-reward ratio may look a lot better at that time for you to maybe want to make this decision, okay? Let's get out of here. Great Britain Pound, Australian dollar. Next one up. Good strong move down. Price pushes up. Pulls back a little bit more, pushes up. It's pulling back a little bit more here. Would expect price to at some point begin to push back up, and I take profit this year. All right. So these right here all look pretty good this right here looks pretty good to potentially be getting into. What I would suggest though, the setup is almost finished. So today is one of those days where you pay close attention to these pairs, wait for that price to cross over the counter trend line, and once it starts to move, once it crosses over the counter trend line, right, on your hourly chart, once that candle that's closes above the trend line, then you can start looking at placing an entry to get into these particular pairs. You know where your take profit is going to be at, and then you can determine where your stop loss at. So I think this right here, this swing here is a pretty legitimate place to put a stop loss at. You could put it at the A. I usually like to put it at the A and then bring it up as we get past the B. We're already past the B right now, so bringing it here I don't think would be a bad idea. But we got to remember, we got to wait for this counter trend line break, because as you can see, price is going down, and we want price to go up before we buy, because we want to buy with momentum on our side. So once we get price across above here, look to buy and take profit like this one. Not bad. And last but not least, we got Great Britain Pound, US dollar. This is another one. This really is a muddled mess right here. I'll be honest with you. It's going to take a while for it to get to a point where I feel comfortable with buying into it. Just looking at how it's performed and the fact that the price before it can even get to the crossover through the counter trend line, the take profit would be, well, actually, man, it'd be outside of it. This right here is going to be a tough one to trade. I mean, if you want to trade it, looks like it's kind of slow moving. At the best right now, it's a wait and hold. Um, it's not a buying opportunity. Once it goes over into the buying opportunity, it's not going to be much room, it appears, between the buying opportunity and where the take profit is going to be at. Because if you notice right here, it came below the green, so that means take profit is going to be up here at the green. And if you look at where the green is at, you know, it's going to be close to right after you hit your, after you move through the counter trend line, depending on where this thing, basically depending on when and where it breaks through this counter trend line. If it breaks this counter trend line somewhere up here, it's going to be a tighter take profit. The further along down here it moves, then yeah, the bigger take profit you'd have. But still, it's going to be, you know, tight. And I guess what I'm saying is that since we all have limited resources, limited amount of money, limited amount of time, always just try to take the best trade on the board. And given the other opportunities that may be available to trade, the Great Britain Pound US dollar may not be in my opinion anyway, the best pair to trade over the next, 72 hours. Best pair trade may be, the Great Britain Pound Aussie, Great Britain Pound CAD, Great Britain Pound Zillion Dollar. One of those two, one of those three might be a lot better, a lot easier to trade. Might be a lot more opportunity available for you with one of those pairs. Yeah, so for right now, I mean, so it looks like it's lining up. Looks like there's more um, buying pressure or buying opportunities coming into the market for the Great Britain pounds pairs. So as that continues to line up, that means it's going to be more, I guess, more momentum behind the Great Britain pound pairs to move up. And as that line up with all these pairs, then just kind of go ahead and expecting to see a big push up in the Great Britain pound pairs. But that's what it looks like. So far we got two of them that looks really good. The New Zealand dollar, Great Britain pound New Zealand dollar, Great Britain pound Australian dollar, and looks like the CAD is trying to work his way into this conversation. US dollar is moving up, but it's still overall it's kind of weak, but it's trying. And Great Britain pound Japanese yen looks pretty anemic as well, but it's trying to do something. So anyway, still have a hold on these just as of yet. We're waiting for that counter trend line move on the Great Britain pound, the Zillion dollar, and Great Britain pound, Australian dollar before we're looking at buying these pairs. But right now, we're looking at just a hold. And let's look at this Aussie US dollar. This thing still looks terrible. daily chart. Let's see here. So, so what I'm doing here is I'm just looking at this overall performance and just trying to gauge um, what we're doing here. Okay. Let's see. Great Britain pound, U.S. dollar. I'm sorry, U.S. dollar, Canadian dollar. Come on. Looks like it's still on an upswing, which is really good because this pair had been on a downward swing for such a long time. Getting close to hitting the price target. Hasn't hit it as of yet. It's looked like it's a bit of a pullback. Probably expect within the next 24 to go ahead and hit this target, which would be here. How many pips away are we? So it's only about 32, so less than 40 pips away. So yeah. So hopefully during the American session, probably hit the target here for this particular pair. And so let's see here. Get out of here, go back. This does 53 pips. Let's see here. All right, so wait for the counter trend line break. Boom, price moves down, goes towards the extension. Before we get to this pair, originally we were looking at being positive on this trade. We're looking, I'm sorry, being not positive, being long on this trade because after this extreme push down, price immediately began to bounce back up and retrace. And it appeared that we were making ABCD Fibonacci extensions moving up. But as you see, looks like the market, excuse me, was actually moving counter. Let's see here. Yeah. So anyway, originally, price was moving. I'm trying to just look at some stuff in the So yes, okay, this is how I got into it. So originally, what I did, I was looking at the counter trend line, and I was looking at this line here. And probably what I should have been doing was looking at the overall, which was from this high point back up in January of last year, going down, right? That would still say that this thing was in a downward trend. But I was looking at the more of immediate trend line here, this counter trend line here, which was showing that price had broke above it, and that indeed it was moving in a bullish manner. But unfortunately, the outer or the long-term trend line, right, which was still bearish, in bearish condition, as you can see, price went up, touched it, and then immediately came back down, which was saying that, even though for short term, price was moving up, over the long term, price is still going to be moving down. So it's kind of just look at this as maybe just a pullback. So that's another thing to kind of take away from this, right? When we look at these pairs, when we look at how we're trading these, look at the overall long term trend line and take in consideration whatever short term trends may be in place as well. So that way you don't get burned by these markets, right? It's real easy to do, real easy to get in here, and all it takes is one mistake, change your whole account, right? Or one mistake really, or one right move really change your whole account. So you just got to be careful and make sure we're making the best decision based off the information that we have, and make sure that we're processing the information that we have properly. Anyway, guys, listen, that's it for me for tonight. Thanks for hanging out. Today is Friday. I think it is. Yeah, today is Friday. And so that means I won't see you until Monday. All right, so have a great weekend. Be safe. And happy trading. Take care.